In this presentation, we will discuss the Act's discreditable rule with regards to public accounting firms, CPA firms, and audit or attestation engagements. Act's discreditable rule. A member shall not commit an act discreditable to the profession. Acts discreditable could include discrimination and harassment in employment practices, solicitation or disclosure of CPA examination questions and answers, failure to file a tax return or pay tax liability, negligence in the preparation of financial statements or records, failure to follow requirements of governmental bodies, commissions, or other regulatory agencies, confidential information obtained from employment or volunteer activities, false, misleading, or deceptive acts in promoting or marketing professional services, improper use of the CPA credential, and failure to comply with records requested. Advertising and other forms of solicitation rules. Now we're going to talk about rules related to advertising and other forms of solicitation. A member in public practice shall not seek to obtain clients by advertising or other forms of solicitation in a manner that is false, misleading, or deceptive. Solicitation by the use of coercion, overreaching, or harassing conduct is prohibited. So we want to make sure that when we do go through the advertising process that it's not in a deceptive type of format. So obviously we want to make sure that there's nothing like misleading within the advertisement. And oftentimes this comes down to basically the naming conventions as well. Once again, we want to be careful with the naming. Obviously a lot of CPA firms will use the name of the owners of the partners of the CPA firm, which is fairly straightforward. If there's some other type of name that's being used for the organization, you just want to make sure and be careful that the naming convention isn't implying something that isn't true or factual. Obviously, we don't want to have overreaching or harassing type of conduct within the advertisement as well, although advertising is kind of, seems like a mild form of harassment to some degree, but, we want to keep within the regulations for, general advertisement type of rules, mainly making sure that it's not a misleading form of advertisement. Prohibited advertising includes creating false or unjustified expectations of favorable results. So if we're making like promises, like we're going to guarantee the audit result is going to be good, or we're going to guarantee that we have results with regards to tax preparation, refunds, or things like that, we don't want to create unjustified expectations within the advertisement process. Implying an ability to influence any court, tribunal, regulatory agency, or similar body official. So if we're trying to get clients by saying, hey, we have influence over these types of organizations, that isn't a good way to advertise either. That's prohibited format of advertising. Claiming that specific professional services in current or future periods will be performed for a stated fee, estimated fee, or fee range when it is likely at the time of representation that such fee will be substantially increased and the prospect entity is not advised of that likelihood. So if we say, if we start to promise, hey, something might happen in the future, the fee will probably be this, in essence, or lead them to believe that the fee will be this fee, or could be this fee, or within this range, when in actuality it may be different. So in other words, once we start the process, once we go down the road, and they're already doing business with us, they may feel kind of locked in at the point in time down in the future when the fee comes down to actually pay, at which point it's higher, and that would be unexpected. That would be an unfair form of advertisement as well. Making any other representations that would be likely to cause a reasonable person to misunderstand or be deceived. So that's going to be our general kind of catch-all clause here. If there's anything that's intentional that's going to cause some kind of deceit or deceptive practice within the advertising, it is prohibited. Now we have the form of the organization and name. A member may practice public accounting only in a form of organization permitted by law or regulation whose characteristics conform to resolutions of council. A member shall not practice public accounting under a firm name that is misleading. Names of one or more past partners may be included in the firm name of a successful organization. So again, typically the convention is to have the names of the partners in the organization. Now, if someone has deceased, obviously they may want a legacy kind of thing and have their name still on the organization. that's permitted. But once you deviate from that kind of standard practice, that kind of standard rule, if you just pick some other kind of names, you got to be very careful with the naming convention if you're planning on doing, public accounting, public practice type of activities such as attestation engagements. A firm may not designate itself as members of the American Institute of Certified Public Accountants, AICPA, unless every CPA owner are members of the institution.